This is Danny Gould with the Selling Silicon Valley Group. Welcome everyone to another Silicon Valley market snapshot for the second week here in May of 2020. Lots to share with you, everyone. If you've been watching these videos for any period of time, you'll see that this data should be encouraging, especially if you're a home seller here in today's market, or if you're just interested in the overall well-being of the Silicon Valley marketplace. But before we get into the data, if you have any questions or you're thinking about buying or selling, especially during this time, you'll know that the data that we share today is very general, and your unique situation requires a very unique analysis. And so if you're a home seller or a home buyer thinking about making a move in the next 6 to 12 months, text the word analysis to the number down below. That's analysis to the number down below for a unique solution to your unique situation. Anyways, guys, let's get started with the data. Today's snapshot's going to be brief. I encourage you to watch the snapshots from previous weeks to kind of get a sense of what the buildup has been to this week. But basically for last month, in the month of April, at the very beginning there was shell shock and then there was recovery. And that recovery is slowly bleeding in to the month of May. And I hopefully expect, I'm very optimistic. I would say I optimistically expect the market to feel very similar and to look very similar in terms of the statistics by hopefully the middle of this year. We're seeing a good pace of inventory and pendings to tick back up. So if you see the infographic down below on your screen, in Santa Clara County, we're looking at today's stats month to date versus this time last year. And we're down 34% year over year month to date, meaning that in the first 12 days of May last year, we had 2,147 homes for sale. Now this is all of Santa Clara County versus 1,414 for up to this point in 2020, which is a decrease of 34%. Now, if you watch the videos last week and the week before and the week before that and the week before that, you'll see that every single week inventory levels have kind of come up and come up and come up month to date, meaning that relative to last year at this time, we're at any given point in time, we're seeing an increase in inventory, if that makes sense. And what we really wanted to start to pay attention to, and what I was telling all the viewers to pay attention to, was whether or not pendings started to outpace. We started to see more pendings relative to inventory, or if we started to see less pendings. And we've seen that number flip-flop, but if you look at the numbers on your screen, you'll see that right now we're fairly even. We're just a little bit below in terms of pendings, whereas last year we had 571 units pending. Now we have 346 units pending month to date, which is down 39% year over year. So only a 5% discrepancy there. Obviously, you'll see the solds down 58%. That's reflective of the data from last month. And so if you watch the videos in April, pendings were down about 50 to 60%. So was inventory, right? And so it makes perfect sense as to why sales are now down 50 to 60%. And so you'll see that trailing, you'll see that lagging indicator of the market, but the leading indicators, especially the pending sales, show an uptick in activity, which is a really good sign, especially if you're a home seller in today's market. And if you're a home buyer, what does that mean for you? Well, a couple things. I have this article here by Forbes. It's a very interesting article. I encourage all of you to read the entire thing. But the article says highing market forecasts expect a W-shaped rebound. Okay, and the article it goes into great depth, great detail. Highly encourage all of you to read. One paragraph stuck out to me. After 2019 logged 5.3 million existing home sales, Realtor.com initially expected 2020 to post 5.25 million sales, a decline of little under 2%. Today, however, in light of the pandemic-induced havoc in real estate, projects annual home sales to slide some 15% to 4.5 million. Now, this is nationally. Housing starts would also drop by 11%. So, what does this mean? Well, obviously, housing sales were already projected to be a little lower this year the pandemic, coronavirus, has obviously impacted the ability for some home buyers to buy. It's also impacted the ability for some home sellers to sell. And despite the pent-up demand right now and the lack of inventory in the current marketplace, will we see a huge surge of inventory by the end of the year? My prediction is yes. I definitely, and if you've watched these videos for any period of time, you'll know that I expect that by the fall, we're going to see a very healthy amount of inventory in the marketplace. But will it be enough to make up for the extraordinarily low amount of inventory in this current environment? The answer is probably no. And so we're probably going to see an environment where on any given week, if these numbers continue to play out the way they're playing out, despite the fact that there's less homes for sale, there's less demand, and despite the fact that there's less demand, there's less homes for sale. In other words, the environment feels the same out here, folks. If you're a real estate agent in today's marketplace, you will corroborate this fact 100%. Homes are still selling relatively quickly. Some homes are being sold over asking price with multiple offers, right? Last year at this time in 2019, albeit it wasn't the most fantastic market, but it was a very good market. It was a great seller's market. And if you paid attention to last week's video, you'll know that even in April of 2020, we had a above 100% list price to sales price ratio, meaning that on average in Santa Clara County, homes were selling for over asking price. That's an absurd thing to think about given the current circumstances. Am I right? And so what's going to give first? What's going to give? And if anything, this is showing that nothing's really going to give. The environment, the competitiveness, it's still going to remain the same. It might be a little bit slower. There might be less of it altogether, and there definitely will be less volume. But when you look at the overall environment and you look at the overall competition from both a seller and a buyer perspective, it's going to be relatively similar to what we've experienced, at least in 2019. Maybe not in 2018. 2018 was a little bit of a different beast, but you start to look at the numbers and you start to realize, my goodness, we're definitely not in a seller's market, in a buyer's market by any stretch of the imagination. And I think if you pay attention to some of the bears out there that are talking about the market, do not correlate economic recession with a housing crash. And this is something that I've talked about in many videos for many years now. Economic recession does not correlate to a housing market correction and or crash. It could be an indicator of it, but in 3 out of the last 5 recessions, housing has appreciated nationally. Think about that. And I've given that statistic. I've relayed that statistic rather many times on these videos, and it's something that I want to keep coming back to, because while there's a lot of doubt, while there's a lot of uncertainty, while there's certainly the tendency to be negative in these sorts of situations, I don't necessarily see anything, at least in today's statistics, that shows in today's market that we're anything less than in a very competitive seller's market. That's all. Now, if you look at San Mateo County, it's a little bit of a different story. And this is also the punchline. We're looking at a negative 14% year over year, month to date inventory level, meaning that there's only 14% less homes right now than there were at this time last year in the month. Conversely, pending sales down 43% year over year, which is a big difference. There's a 30% difference between active inventory and pending sales month to date, meaning the environment's a lot less competitive than it was at this time last year. Why is this important? Well, in Santa Clara County, things are hunky-dory. In San Mateo County, things are not as great. And why does this matter? Because, as we've talked about before, there is this concept, I've preached this concept of the Silicon Valley trickle-down theory, where everything in the Mid-Peninsula, the trends, the stats, the data there, tend to implicate things and tend to trickle down into Santa Clara County at a later point in time. This is proof positive that something could happen in the near future to basically, this indicates that what we could experience is a increase in inventory, but demand stays stagnant. if you've been watching these videos, you'll know that San Mateo County in April, the environment was fairly similar, meaning we saw a fairly consistent change in pendings and inventory, and they were fairly corollary, maybe not as closely tied or closely knit as the Santa Clara County statistics were, but they were always within 10% or so. Now we're looking at a 30% difference, where there's significantly more inventory than there is demand relative to this time last year, which is a fairly big indicator of things that could come here in Santa Clara County in, I wouldn't say short order, but in the next 3 to 6 months. Am I saying that it's definitely going to happen? Absolutely not. There are many things that could happen between now and then that could instantly alter the course of the market. But is this something to pay attention to? Absolutely. And are these statistics the utmost leading indicators of potential market corrections here in Silicon Valley? I believe so. This is why I keep coming back to these statistics, because more than anything else, this is giving us real-time information on the county in general. But again, if you want something very similar to what's happening in your particular area, either an area, a zip code, a community that you're either thinking about selling in and or buying in, you can text the word data to the number down below, and I can actually work up a very intricate and specific detailed analysis on the property and or the zip code or area or community that you're looking in. My goodness, it's late, guys. I've been up for a long time today, so bear with me, but that's all the time we have for today, everyone. I'm really curious to hear your take on the Silicon Valley marketplace. Go ahead and leave your comments down below. Do you think we're gonna go up or down this year? Stay neutral? Are we doomed? I'd love to hear your thoughts, your comments down below. I'll be sure to engage with you as well. And if you're a current buyer or seller or an investor in today's marketplace, go ahead and text analysis to the number down below for a unique solution to your unique situation. This is Danny Gould, everyone, with the Selling Silicon Valley Group, and I will text all of you. I will not text all of you. I will see all of you in the next Silicon Valley Snapshot.